Never, ever argue with your trading system. You can't produce a baby in 1 month by getting 9 women pregnant. Amateurs think about how much money they can make. Professionals think about how much money they could lose. The price of a commodity will never go to zero. When you invest in commodities futures, you are not buying a piece of paper that says you own an intangible of the company that can go bankrupt. It's not always easy to do what's not popular, but that's where you make your money. Buy stocks that look bad to less careful investors and hang on until their real value is recognized. 99% plus of traders don't care about Ferraris and yachts. They just want to pay their bills, save a little extra money, and sleep well at night. The only way to do that is to bet 70% or more. Anything less, and these goals are nothing more than fantasy. Are you willing to lose money on a trade? If not, then don't take it. You can only win if you're not afraid to lose. And you can only do that if you truly accept the risks in front of you. We don't care about why. Real traders only have the time and interest to care about what and when and if and then. Why is for pretenders. Trading is not for the dabblers, the dreamers, or the desperate. It requires, above all, one steadfast trait of dedication. So if you are going to trade, trade like you mean it. In trading, you have to be defensive and aggressive at the same time. If you are not aggressive, you are not going to make money, and if you are not defensive, you are not going to keep the money. I'm only rich because I know when I'm wrong. I basically have survived by recognizing my mistakes. It was clear to me that other people could trade for a living, and if it was possible for other people to do it, then I could persevere long enough to figure it out. The biggest risk is not taking a risk. In a world that's changing really quickly, the only strategy that is guaranteed to fail is not taking risks. I have 2 basic rules about winning in trading as well as in life. 1. If you don't bet, you can't win. 2. If you lose all your chips, you can't bet. I just wait until there is money lying in the corner, and all I have to do is go over there and pick it up. I do nothing in the meantime. I believe in analysis and not forecasting. Investing what is comfortable is rarely profitable. The purpose of trading is not being right, the purpose is to make money, and I think that's my #1 rule. Don't get hung up on your current positions. Learn to take losses. The most important thing in making money is not letting your losses get out of hand. Whatever method you use to enter trades, the most critical thing is that if there is a major trend, your approach should assure that you get in that trend. The fundamental law of investing is the uncertainty of the future. Wall Street is the only place that people ride to in a Rolls-Royce to get advice from those who take the subway. In the business world, the rearview mirror is always clearer than the windshield. Today, people who hold cash equivalents feel comfortable. They shouldn't. They have opted for a terrible long-term asset, one that pays virtually nothing and is certain to depreciate in value. If you're in the luckiest 1% of humanity, you owe it to the rest of humanity to think about the other 99%. Only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. You only have to do very few things right in your life so long as you don't do too many things wrong. Whether we're talking about socks or stocks, I like buying quality merchandise when it is marked down. The difference between successful people and really successful people is that really successful persons say no to almost everything. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Success in investing doesn't correlate with IQ. Once you have ordinary intelligence, what you need is the temperament to control the urges that get other people in trouble investing. The goal of a successful trader is to make the best trades. Money is secondary. Time is your friend, impulse is your money. There is a time to go long, a time to go short, and a time to go fishing. Spend each day trying to be a little wiser than you were when you woke up. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pay it. The rich invest in time, the poor invest in money. If most traders would learn to sit on their hands 50% of the time, they would make a lot more money. Throughout my financial career, I have continually witnessed examples of other people that I have known being ruined by a failure to respect risk. If you don't take a hard look at risk, it will take you. Do not anticipate and move without market confirmation. Being a little late in your trade is your insurance that you are right or wrong. Remember that stocks are never too high for you to begin buying or too low to begin selling. Stock price movements actually begin to reflect new developments before it is generally recognized that they have taken place. It is the job of the market to turn the base material of our emotions into gold. You never know what kind of setup market will present to you. Your objective should be to find an opportunity where risk-reward ratio is best. You get a recession, you have stock market declines. If you don't understand that's going to happen, then you're not ready, you won't do well in the markets. Commodities tend to zig when the equity markets sag. I have found that when the market's going down, and you buy funds wisely, at some point in the future, you will be happy. You won't get there by reading. Now is the time to buy. There were two sets of rules and it comes to money, one set of rules for the people who work for money and another set of rules for the rich who print money. The market can stay irrational longer than you can stay solvent. In a bull market, one can only belong or on the sidelines. Remember, not having a position is a position. Invest for the long haul. Don't get too greedy and don't get too scared. People in markets find a way of getting down to the essentials of I have, you want, you have, I want. Trading doesn't just reveal your character, it also builds it if you stay in the game long enough. Bull markets are born on pessimism, grow on skepticism, mature on optimism and die of euphoria. One of the funny things about the stock market is that every time one person buys, another sells, and both think they are astute. Stock market bubbles don't grow out of thin air. They have a solid basis in reality, but reality as distorted by a misconception. Trading effectively is about assessing probabilities, not certainties. Value stocks are about as exciting as watching grass grow, but have you ever noticed just how much your grass grows in a week? When purchasing depressed stock in troubled companies, seek out the ones with the superior financial positions, and avoid the ones with loads of bank debt. Only the game can teach you the game. Investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas. You don't stop a train with a brick wall, even there's a wall of selling, the train is going through that brick wall and take out a lot of bears. A handful of men have become very rich by paying attention to details that most others ignored. One of the funny things about the stock market is that every time one person buys, another sells, and both think they are astute. An investor without investment objectives is like a traveler without a destination. If stock market experts were so expert, they would be buying stocks, not selling advice. The stock market is a device for transferring money from the impatient to the patient. In many ways, the stock market is like the weather in that if you don't like the current conditions, all you have to do is wait a while. The markets generally are unpredictable, so that one has to have different scenarios. The idea that you can actually predict what's going to happen contradicts my way of looking at the market. The intelligent investor is a realist who sells to optimists and buys from pessimists. The main purpose of the stock market is to make fools of as many men as possible. All the math you need in the stock market you get in the 4th grade. If you are shopping for common stocks, choose them the way you would buy groceries, not the way you would buy perfume. Stocks are bought not in fear but in hope. They are typically sold out of fear. The stock market is filled with individuals who know the price of everything, but the value of nothing. The problem is not whether a business will survive in competition with business, but whether any business will survive at all in the face of social change. A company has only so much money and managerial time. Winning leaders invest where the payback is the highest. They cut their losses everywhere else. A good leader must have the wisdom to know when a pursuit is no longer worthy of being pursued, a time when the losses of the present must be accepted and cut to preserve the gains and providence of the future. We are in the business of making mistakes. Winners make small mistakes, losers make big mistakes. Cut your losses. Cut your losses. Cut your losses. Then maybe you have a chance. We want to perceive ourselves as winners, but successful traders are always focusing on their losses. In the short run, a market is a voting machine, but in the long run, it is a weighing machine. There's no shame in losing money on a stock. Everybody does it. What is shameful is to hold on to a stock, or worse, to buy more of it when the fundamentals are deteriorating. Money is multiplied in practical value depending on the number of W's you control in your life, what you do, when you do it, where you do it, and with whom you do it. My favorite things in life don't cost any money. It's really clear that the most precious resource we all have is time. The feelings we accept and enjoy rarely interfere with trading. The big money is not in the buying or the selling, but in the waiting. Don't look for the needle in the haystack. Just buy the haystack. Know what you own, and know why you own it. You make most of your money in a bear market, you just don't realize it at the time. Investing is the intersection of economics and psychology. You need to know very well when to move away, or give up the loss, and not allow the anxiety to trick you into trying again. Trade what's happening. Not what you think is gonna happen. The hard, cold reality of trading is that every trade has an uncertain outcome. The game of speculation is the most uniformly fascinating game in the world. But it is not a game for the stupid, the mentally lazy, the person of inferior emotional balance, or the get-rich-quick adventurer. They will die poor. The consistency you seek is in your mind, not in the markets. The question should not be how much I will profit on this trade. The true question is, will I be fine if I don't profit from this trade? If you don't find a way to make money while you sleep, you will work until you die. Always start at the end before you begin. Professional investors always have an exit strategy before they invest. Knowing your exit strategy is an important investment fundamental. To avoid whipsaw losses, stop trading. Don't focus on making money, focus on protecting what you have. Trading is very competitive, and you have to be able to handle getting your butt kicked. If I have positions going against me, I get right out. If they are going for me, I keep them. I will keep cutting my position size down as I have losing trades. When I am trading poorly, I keep reducing my position size. That way, I will be trading my smallest position size when my trading is worst. Don't be a hero. Don't have an ego. Always question yourself and your ability. Don't ever feel that you are very good. The second you do, you are dead. The secret to being successful from a trading perspective is to have an indefatigable and an undying and unquenchable thirst for information and knowledge. Don't ever average losers. Decrease your trading volume when you are trading poorly, increase your volume when you are trading well. Never trade in situations where you don't have control. The whole world is simply nothing more than a flow chart for capital. I am always thinking about losing money as opposed to making money. Thank you for watching. And remember to subscribe for more videos.